Hello, this is Lance Zimmerman, and welcome to the Cattle Facts Closing Bell for Friday, June 24th. Our top story, Spring and Summer Retail Beef Featuring. Consumer demand for beef at the retail meat case and restaurant ultimately affects the prices producers receive for the cattle they raise. The effects of the recession are still lingering in the United States, and consumers are feeling the pressure of higher retail gasoline and food prices. These are the main reasons Cattle Facts has been focused on retail beef prices throughout the spring and upcoming summer months. During the last 12 months, retail prices have seen an all-time high, while margins on beef items have been relatively low. It's difficult to know exact retail beef margins. However, a quick look at the boxed beef cutout price relative to the average retail beef price shows that beef producers and packers have been capturing a historically high proportion of the retail dollar over this time. So what does this mean for cattle producers? Over the last 6 months, retailers have likely been receiving some of the lowest profit margins on beef sales in recent history, while cattle producers have been receiving record prices for their calves and fed cattle during the same time. Boxed beef prices have come down more than $10 from the highs established in early April, and retail margins have likely improved as meat case prices make new highs. At the same time, weekly retail beef advertisements have dropped considerably during the last 12 months. Beef has lost advertising share to poultry, and overall protein featuring has dropped in the recent months. In general, beef's not receiving the retail exposure it enjoyed prior to the recent run in prices. Higher cattle prices hinge on the ability for U.S. consumers to purchase beef at affordable prices, and the retail sector also needs to make a profit on beef for featuring activity to return to pre-2010 levels. Beef sales during the Memorial Day weekend were strong, and robust holiday sales leading up to July 4th will be equally important in supporting cattle prices at the new higher trading ranges established this spring. Now, your weekly commodity markets. The fed cattle market ranged from steady in the north to $3 to $5 higher in the south. The bulk of northern cattle sold for $112 live and $178 to $180 dressed. Cattle sales in the south were collected at mostly $112. Boxed beef prices were higher on the week as limited availability due to active export and July 4th sales occurred over the past couple weeks. Feeder cattle and calf prices were also considerably higher, reacting to better than expected fed cattle markets and lower corn prices. Feeder cattle prices were $4 to $8 higher this week, while calves ranged from even to as much as $6 higher. It is summer, so volumes remain light, especially in non-drought affected regions. Slaughter cows gave up ground this week as they sold for $1 to $2 softer, while corn was lower this week as planting was completed and the dollar firmed, raising doubts about the export market. Thanks for watching, and remember to visit cattlefacts.com for your latest market news and analysis.